It may not seem like it, but inflation has already peaked and is now starting to come down.
We're past peak inflation.
Energy is the largest piece of inflation, and if we look at natural gas and crude oil, they're both down around 40%. And if we look at energy as a whole, it's basically cut in half. Food inflation has recently peaked and is now down for the second month in a row. Now, as a whole, inflation is down for the fourth month in a row, but the Fed is worried about core inflation, which includes shelter. Shelter is a little more stubborn because it has to do with rents, and rents are sticky because they include 12-month contracts. But recent data shows us rents have finally peaked. Now, if we want to know where inflation is headed, we can look at producer prices and supply chains. Producer prices lead CPI because it's inflation at the producer level, which is at the beginning of the supply chain. Now, PPI also indicates inflation starting to slow down.
Inflation's going to start coming off. We saw that with PPI today as well.
Now, one of the reasons inflation persisted longer than expected was because supply chains were under pressure. But now that's starting to change because the Global Supply Chain Pressures Index tells us supply chain pressures are starting to come back down to normalized levels. This means productivity is increasing, so prices can come down. Now, getting prices lower is a good thing, but it comes with a cost.
Household debt is at a record high in the United States.
They've run out of cash, they're on their credit cards.
Less cash in the system for investing, borrowing, and spending.
Credit card debt is at $930 billion. Not only is your balance higher, but your interest payment is higher.
We've seen an increase in auto loan delinquencies.
Higher interest rates for consumers, investors, governments, and businesses.
Interest rates go higher and stay higher. That's the fiscal risk right now.
These are all monetary policies put in place by the Fed to fight inflation.
How much pain are we willing to cause in order to help bring down inflation?
We have a ways to go.
This year, the Fed increased interest rates at the fastest pace they've ever raised in history. They've never done 75 basis points 4 times in a row. And the result is the stock market, the crypto market, the bond market, and the real estate market are all getting crushed.
This is up there with one of the biggest sell-offs of all time.
I mean, Facebook's down 80% almost.
Who knows what the bottom is?
Now, the Fed isn't going to stop raising rates, but they are set to slow the pace of rate hikes into December and into next year.
It may be appropriate to slow the pace of rate increases.
At some point, it will become appropriate to slow the pace of increases.